Hey, what's going on, guys? Sterling the Investor here. Welcome back to the channel where we discuss everything from investing to business and everything in between, bringing Wall Street to your street. And in today's video, we're going to talk about a stock that recently popped on my radar, Footlocker. So, out of all of the retail businesses that specialize in like athletic footwear, I think Foot Locker has done the best job at kind of evolving with the times and adapting to the new online retail landscape. I mean, they own East Bay, which, if you remember back in the day, used to be a magazine, but it's largely an online retailer now. They own Foot Action, of course, the Foot Locker brand, and they also own Champ Sports, and they also own an app called Goat, which is kind of like a reseller app for people that are really into sneakers. So I thought that was a really aggressive push to kind of just stay on track and stay up to date with just kind of where things are going. So just to jump into some of the fundamentals of the stock, of course, about a $3 billion market cap, close to that uh, a 6 PE ratio, which is just absolutely amazing right now. Um, Year over year, their cash is up about $400 million, which is crazy considering the current landscape of everything with the pandemic going on. So all of that is just good signs. Just a balance sheet just flooded with cash that they didn't have to take out much more debt to generate that cash, which is huge because a lot of times you can look at a balance sheet and you can see cash go up year over year, but you also see the debt go up almost, right along with it, like it correlates. But in this case, cash is up a whole lot and debt not so much. So that's an excellent feature of this stock right now. You're gonna get a decent dividend. Just given the situation right now, most companies have suspended their dividends, but Foot Locker seems to be getting everything back on track here pretty quickly. So you can depend on that dividend, going forward in the future. And just in terms of a portfolio, the reason I like this stock is it really gives me diversity. I'm pretty tech heavy, as I'm sure most of y'all are. The Teslas, the Facebooks, the Microsofts, the Googles, Amazons, all of these tech companies that are really, really pushing and kind of propping the stock market up right now. But they're all going to pull back at some point. And when they do pull back, you want to have a little diversification, whether that be in index funds or other individually picked stocks in different sectors. So I think this is an excellent stock that gives you some diversity. That's at a value price right now. I would say anything under $33, $34 is excellent. Probably all the way up to $37, $38 is still a good buy. But I can see this stock, doubling your money or 3xing your money over the next 2 to 3 years, and you'll collect that dividend along the way, which is excellent. So I really don't see how you can lose with this stock right now. Some things that I like to do is when it's like a tangible product and I can go to a store or go to a facility and kind of see what's going on. The last few times I've been to a shopping mall, there's been lines waiting to get in Foot Locker. It could have had something to do with going back to school, with parents wanting to get their kids shoes, or I'm not sure. I'm not a sneakerhead, so I'm not really into that culture. But I know every time I've went to the mall, I've seen people waiting in lines to get into Foot Locker, Champs, and Foot Action, which Foot Locker owns all of them. So that's a good sign. So if you guys have any questions regarding this stock, please leave them in the comments below, or any questions in general, just reach out to me and I'll get back to you as soon as possible. Until next time, let's get this cheese.